afternoon. Thank you for joining us for the webcast series, Audit Analytics for CPAs by CPAs. Our topic today is fraud prevention. This webcast is worth 1 hour of NASDA CPE credit. In order to receive CPE credit, you must be logged in for the entire hour, answer all 3 polling survey questions, and complete the brief evaluation at the end of the webcast. We are recording this session. The session slides and recording will be sent out tomorrow. Qualifying attendees will receive their CPE certificates within the week. Our presenter today is Mark Mayberry with BDO USA. He has extensive experience in accounting, auditing, and information systems. As the director at BDO, he is responsible for research, development, and implementation of audit technology strategies. Mark has been using IDEA for more than 20 years, and he was honored as the IDEA User of Excellence in 2011. Additionally, he is a member of the AICPA Emerging Assistance Technology Task Force. Before I turn the webcast over to Mark, I want to remind you that if you have any questions, you may type them in the questions tab on the right side of your screen. We will try our best to get to all the questions at the end of the webcast. And now I'm going to pass control over to Mark Mayberry, and he is going to share tips on how to use data analysis to prevent and detect fraud, and how IDEA can help with your fraud prevention initiatives. Okay, Mark, you should have control.
Okay, I think you should be able to see my screen.
Yes, sir.
All right, welcome everyone. So today my topic is talking about fraud. So I'll go through some information about fraud, just generally some common scenarios and red flags. I'll walk through a little bit of an analysis of data analytics. That's kind of a hot topic in the profession these days. Work through some information about how you can get some data from your clients, whether that's external clients or you're doing some internal audit work. Then I'll walk through some journal entry tests. I will have a brief demo of some techniques in IDEA, and then I'll do some Q&A at the end of the presentation. So please save up your questions till the end. So just to set us off to start with is to talk about the cycle of fraud. And this image is really just very similar to the classic fraud triangle, where you need really all 3 of these elements to have fraud. You need the opportunity to do the fraud. You need some pressure or some sort of an incentive to do that. Perhaps you're having to meet some goals, or maybe you're having some financial difficulties, and then you have to have some sort of a rationalization for the fraud that, well, I'm owed this, or I deserve this, or I'll pay it back, or something like that. So that's kind of just a little bit of a twist on the fraud triangle. Then, whenever I talk about fraud, people say, well, who's responsible for fraud? Well, if we look at the auditing standards literature, it kind of gives us some guidance on here. So management has the primary responsibility for prevention and detection of fraud, both of the entity and the management. And the auditors have a responsibility to obtain reasonable assurance that the financial statements as a whole are free of material misstatement, whether caused by fraud or error. So that last little bit there, whether caused by fraud or error, we'll talk about. Here are some different kinds of red flags that you may see. I think I've seen many of these, or several of these, in my time as an auditor. I often look at things that are unusual, infrequent, complex. The explanations are, they're soft, they're not really strong or powerful, they're very vague, or significant items that are happening kind of around the end of the year. So things right at the end of the year where people are perhaps doing some backdating, or there's an unusual subsequent event after the end of the year that perhaps has an impact on the previous reporting period. So those are some common red flags. So getting back into the intentional or unintentional. So fraud is intentional and error is unintentional. So people can make mistakes, that's fine. And our data analytics can pick up those mistakes as well. But the focus of this is to really look at the intentional part, which is really the fraud aspects of the financial statement fraud. So thinking about financial statement fraud broadly, why are these things being caused? Well, there's usually some internal reporting to management. Maybe there's some budgeting. They're trying to hit a particular target in the budget. Maybe there are some compensation decisions. So perhaps some people are getting a bonus or something based upon certain financial metrics. And so there's maybe an incentive there to move the numbers to just meet those targets for the compensation decisions. Or there may be some external reporting elements to the fraud risk as well, and that is because they have to report their numbers to their creditors or banks or creditors, or perhaps to their shareholders or the investor community. And it may not involve the misappropriation of assets. It just could be that they're inflating the revenues or knocking down the expenses to show a better picture than what it really is. So here are some examples of some common fraud scenarios. So one of the most prevalent one, I think, is when you think about companies needing to report a certain revenue number or a certain revenue trend, and they're reporting this primarily to shareholders or analysts. Perhaps they want to book a few extra revenue items in there to make the revenue number look a little bit stronger. Perhaps they'll do some timing differences where they'll shift information from one period to the other period. An example I think of that is when I had a company, they were having a really good year, so perhaps they adjusted their reserves and analysis to hold back a little bit. So if next year wasn't quite so good, they had some extra cushion if there that they could go with. There are some examples of the asset misappropriation on the right-hand side that you may or may not run across to when you're doing that. So at this point, I think we're ready for our first survey question.
Thank you, Mark. As you can see on your screen, our first poll is up. The question is, when considering what is fraud versus error, both can result in a material misstatement of financial statements, true or false? Just a reminder, you need to answer all three of the polls in order to receive CPE credit for this webcast. So we've got about 75% of you, so I'll give you a few more seconds to respond. And we'll get back to the content. An overwhelming amount of you are voting for true, 97%, and that is accurate. Okay, I'm going to give you about 5 more seconds, and then I'm going to turn it back to Mark. All right, Mark, you should have control of the screen again.
Okay, so there we go. Good job, everyone. All right, so the next few series of slides they come from the Association of Certified Fraud Examiners, and they do a report to the nation every other year. And I picked some of these slides to demonstrate some certain topics that are found in their analysis, in their survey. And the first one is, and this one's a little hard to read, when you get your slide deck, you may need to expand this a little bit. It's got a lot of different colors on it, but basically what it's showing here is that depending on which department you're in a particular company, are the different colors. And on the left-hand side are the different types of fraud scenarios, fraud schemes, if you will, and how prevalent they are within that particular area. So you can kind of look at this and say, well, if I was going to do some billing fraud, then that's primarily going to show up in a couple of areas. Perhaps that's in the customer service area or accounting or finance. I'm sorry, accounting or finance areas there. So that's why those kind of are a little bit more prominent. Check tampering, of course, you would expect that to be more in the accounting and finance department as well. So just kind of give you a little sense of, as you're targeting your fraud procedures, you can kind of narrow down what you're looking for, looking at the different departments and the types of fraud that may be happening there. This next one is quite an interesting one. It really shows the median loss by different types of categories. So you can see on the top one that asset misappropriation, so basically somebody's taking some asset, whether that's cash or inventory or something like that, that the median loss is somewhere a little over $100,000 dollars, and it's fairly consistent amongst the 3 biennial periods that they were covering, 12, 14, and 16. If you look at the financial statement fraud, which is the area of focus for today, you can find that it's 9 to 10 times as much. It's around, the median loss is around $1 million. So you can find out that, you know, while people are maybe doing some misappropriation of assets, actually it's much more likely to find a material fraud in the financial statement area. So not that you wouldn't look for asset misappropriation, but the bigger dollars are in the financial statement reporting fraud. This next one here really just kind of shows the frequency and median loss by scheme. And so as you move from the left to the right, you can find that the billing fraud and check tampering are way high with more risk and more dollars that are involved there. The next one I think is quite an interesting one as well. And this one is kind of demonstrating that the as the time goes on, the fraud grows. And this is probably, you know, a really telling story here, that I think fraud started off a little smaller, and if people are getting away with whatever that fraud is, the fraud just keeps building and building and building, and as you can see that once it gets out over the 3 to 5 year period, you know, the numbers really grow quite a bit. So these things take a little while to kind of build up, and they're not as frequent. So the longer ones don't happen as often because maybe they've been caught along the way, but it just kind of shows the frequency and duration. This next one is an interesting one, and the reason I like this one is because it shows how good we do at detection of frauds, and generally I can say we probably don't really do a great job on detection of frauds. And if I'm looking at the top one, that's tip. That's basically somebody is telling on somebody else that they did something and I'm turning them in. The second one is internal audit. So internal audit is doing okay, you know, compared to the tip, they're not too great. Management review is also the the 3 one. If you look further down the list on the left-hand side, you'll find that external audit is in the 3% range. So the external auditors aren't doing a great job in the initial detection of fraud. It's not that they're finding it. They may actually pick up on the fraud because somebody tells them that this is an area to go look at, and they'll go look at that. So we don't do a great job on this, but basically if somebody's going to turn somebody else in, then the way you could approach it is talk to different people inside and outside the accounting department, and maybe they'll tell on their friends or their colleagues. The next one is really looking at the primary internal control weaknesses by the scheme type. So what this is really looking at is within the asset misappropriation, corruption, or financial statement fraud, what is the primary driver for this scheme? And the first one is really lack of internal controls. Now, I know I hear people say, well, my company doesn't really have a lot of controls, or you know, maybe we don't want to go test the controls, but companies have controls, and they may not need a robust set of controls. There may need to be just a few controls in certain key areas to kind of mind the store, if you will. The second one, most prominent one, is there is a lack of management review. So, you know, people don't have controls, and then they don't have anybody reviewing what's going on, so they can get away with it. They keep getting away with it, and all of a sudden that builds over that trend line that I showed earlier. Or the third one is people are overriding the existing internal control. So maybe there's a control in place, and people are just kind of bypassing that control and or overriding it, and so the control isn't really working because they skipped it. All right, so what can we do with our overall response to fraud risk? Well, one thing is we can increase or change our mix of staffing and supervision level to, again, think about putting people that are very inquisitive on areas that are more subjective. They'll ask better questions, perhaps. And then the last one on here is really just incorporating an element of unpredictability. So, you know, perhaps we did an audit last year, and we're going to do it basically the same this year. Well, guess what? After a period of time, the companies that we're auditing know where you're going to look. So it's easier for them to hide things in the areas that you're not going to look at. So introduce a little bit of unpredictability along the way. Maybe you introduce 1 or 2 additional tests this year, in areas that you don't necessarily look at. That will throw the auditee off perhaps a little bit, and maybe you'll uncover some fraud here. So the management override of controls, the ways we could perhaps take a look at that, or to look at journal entries if they're going to try to play with the numbers. Oftentimes they'll do it through the journal entry process, not through the daily transactions. It's much easier to post a journal entry or to alter the results rather than to alter a bunch of documents along the way. And then make sure you're really questioning the business rationale for the significant unusual items. Now, there could be unusual items that happen in there, but make sure there's a good reason for why those are happening. So jumping into data analytics as a next theme of the talk here, data analytics, you might have been hearing a lot about this for the last year or two. It's getting a lot of press in the profession, a lot of interest from internal auditors and external auditors. And when I think about data analytics, I think about how we can replace or supplement what we're currently doing. And the power of the analytics, if you add a layer of visualization in there, you can actually examine or analyze 100% of the population for certain patterns and criteria rather than doing a sampling. So that's kind of one of the keys there. Of course, we have to pay attention to the integrity of the data. So if you're looking at bad data, your analytics won't be that strong. So we need to make sure we're paying attention to integrity. And then also normalization, and I'll talk about normalization in a little bit here. So just generally thinking about data analytics, we're looking at summarizing data to extract information, perhaps look at some trends and develop our conclusions. We can analyze large data sets. We can look at different data sets from different systems or locations. So if you're auditing a company that has multiple geographical locations and they're using multiple accounting systems, you can use the analytics to kind of bring them all together and take a look at the data in total. And then you can automate some of these tasks, repeatable tasks along the way. So when I think about data analytics with different phases, I break it up into 5 different pieces. First one is we need to acquire data from the accounting system or perhaps from the operational system. So how do we get that data out into a format that we can use? Once we get that data out, how can we transform it or standardize it so that it's a little bit easier to work with? And I've got a little bit on that. What do we do with the data once we get it out? As far as how do we maintain that? What kinds of analyses do we do? And what kinds of reports are we going to build on top of those analyses? So thinking about data acquisition, I think this one and the next part are maybe the 2 most time-consuming or difficult parts for us to get our hands around. And it's just because we don't do it very often. And the accounting systems may or may not be that easy to get the data out of. But once you can get your hands on the data, the rest of the part is actually fairly straightforward. The types of information that we're looking for, I'm looking for some financial information. Perhaps we'll look at some operational information. And as we build up through the time here, maybe we'll get some social data, or maybe we'll get some big data, off the internet and other places. So there's a lot of data out there. There's a lot of noise in the data, so we need to kind of look and focus on what we're really going to be paying attention to. And so the first thing we do when we get the data is we want to kind of transform that into kind of a standardized way, so that the names and the addresses are in a consistent way. When we do look at date fields, that we know which way the dates go. Is it month, day, year? Is it day, month, year? Is it 2-digit year? Is it 4-digit year? And we want to provide some consistency, because that way when you look at that date field, you know what you're looking for. If you have currency conversion, we'll take a look at that, and then we also need to make sure we're paying attention to any kinds of codes. So customer codes, source codes, vendor codes, HR codes. So in the data analytics, we're looking for patterns of fraud. So what you could do is, there's a few examples here. I've got many examples in my slide deck. One is to look at patterns that are just below checkpoints. So if there's a $5,000 limit where there needs to be a second set of eyes or a second set of review on this, A common fraud scenario is that they'll put transactions in right below that threshold, and they may split transactions so that the transactions are right below that threshold. Payments of duplicate invoices, round dollars, looking at trend analysis, looking at unusual times of entries, and this is really, data analytics is more of an iterative process. So you may kind of go in to the data analytics with some thoughts, and as you go through the data analytics, you may refine your process and your expectations as you move along. Different kinds of reports that we can do, reconciliations are kind of key. Looking at credits in customers, so why are certain customers getting a lot of credits, analyzing vendor and those kinds of trends as well. So lots of different kinds of reports. I think we're ready for our next polling question, Lindsay.
Yes, thank you. As you can see, our poll is data analytics tools can replace and/or supplement traditional substantive procedures by allowing the auditor to analyze 100% of data, providing statistical analysis and improved sample selection, either neither of these or both of these. So please make your selection. Just as another gentle reminder, you must respond to all 3 polling questions in order to receive CPE credit. And we have received some questions, and we'll save those till the end. But again, if you have any questions, go ahead and type those in the questions box, and we will respond to them when we get to the end of the webcast. Okay, I'm going to give you about 5 more seconds. All right, thank you very much. There you go, Mark.
Okay, so here we go. The next section is really to talk about the audit data standards. I'll go through this section pretty quickly because I want to get into the procedures in the demo. So one of the challenges that auditors face and management faces is really how do you get the data into a usable format in a repeatable way? And part of the work that the Emerging Assurance Technologies Task Force has done is in working with the AICPA and the ASEC, is actually to publish some audit data standards. And the intent of this is really to help auditors get data out of accounting systems into a format that you can work with and build your analytics on top of that. So the next slide is really just a status of where they're at, and I'll put some links in here. But on the AICPA site, you can find that we've published a base standard, general ledger, order to cash, procure to pay. We recently exposed the inventory one, and there's a couple more that are coming. And again, I'll show you how these work in just a second. But the intent of these is really to kind of give you kind of a framework or an example to work from as we go along the way. So in the base standard, there are 2 formats that we're looking for the files, either a flat file or they're actually these can be tagged for XBRL Global Ledger. And we've defined what formats for certain kinds of fields. So what a text field should look like, what a numeric field, date, and time. And within the data standards, there are levels 1 and 2. Level 1 is really required fields. We think these are the ones that you really need for a lot of the analytics. So when you can get those, we really are looking for those. And level 2 may or may not be available in the accounting system, but when you do get the ones that are in level 2, you might want to get those as well. At the end of each one, there's a questionnaire that walks you through. There's some quality of data indicators and some process information as to how you got the data. This next screen, and there's a couple screens like this, and I'll go through them relatively quickly, just gives you a visual of what one of the tables looks like. So you can see that within each table there's a field name. So this is the standardized name we're looking for. We describe if it's a level 1 or level 2, what kind of a field it is, what the length is. If you're going to go with the XBRL Global Ledger taxonomy element, that's in there, and a brief description off to the right-hand side. So the purpose of this is when it doesn't really matter what the field is called in the accounting package. If you can get it transformed into these field names, then you can build your queries on top of these field names. And this way it's repeatable for a number of accounting packages, and you don't have to build your queries just for an accounting package. In the general ledger standard, we go through the general ledger detail, trial balance, chart of accounts, and a source listing. At the end of the document is a profiling report and a questionnaire, basically getting a sense of what kind of data it is, what the time period was, and some quality checks on the data as well. This just shows you a little bit of the relationships in there. I think as we're moving towards data analytics, teams are going to have some general knowledge about data and how it works and how it's structured. So you may want to look for other opportunities to learn about that. Just an example of what the trial balance would look like for a period of time, or as of a point in time. So again, just field name, type, length, code. In the order to cash subledger, we're really going through the process from start to finish, through the sales order all the way to the cash receipt. And there's also a table for the customer master, so you can see the elements that are in order to cash. And this, as we build up to these other ones, they get a little bit more complex in how the data fits together. The color coding on this is really showing you that some of the tables are in the base standard. Some of the tables are kind of the mandatory level ones, and perhaps some of the other ones are the level 2 table that you may be able to go through. On the flip side of the order to cash, on procure to pay, we go all the way from purchase order through goods received all the way to the ultimate resolution of the payment or the write-off or adjustment, if you will. And again, there's a profiling report and questionnaire at the end. This is what the table looks like when you go through that. And again, there are a number of benefits for the audit data standards. It helps us analyze the different business units with different reporting systems. We'll be able to do, as we get our data more standardized, we'll be able to do some more substantive predictive analytics and analyze some growth opportunities, but really one of the keys to this is we'll be able to search for those questionable transactions along the way. So these data standards are there for your benefit. I would encourage you to go take a look at those in your leisure, but the intent of this, again, was to help you from accounting package into a standard, transform the data so that you can layer your analytics on top of that. Then I'll jumping into some procedures because you probably want to know, well, what are you going to do about this? The area of focus for today is on journals. I've got some other examples I'll show you as well, but the CAQ had put out a practice aid for testing journal entries, and the reason they're doing this is because the journal entries are presumed to be a fraud risk. There are lots of opportunities for companies to do a fraud within the journal entry process because it's not the normal day-to-day kinds of operations. So that practice aid. In the Idea Marketplace, there are some financial apps, and I'm going to show you one of these in just a little bit here, which is the general ledger, but you can see there's some financial apps that are available. Also, there's a smart exporter, so if you have SAP data, this exporter will get your SAP data into a usable format. And there's a couple of other automated apps that are as well available for you. You can just go to the automation site and look for the Idea Marketplace and find examples of what these are and what they're for. And just here's some examples of the ones that are in the general ledger. So what are we looking for? So duplicates, missing journal entries are basically gaps. When you look for missing journal entries, that's how you help with your completeness. Journal entries by user, summarized by account number, journal entries by period, journal entries by source. So those are some examples of what you can do. So at this point, what I'm going to do is kind of show you how this potentially would look. So I'm going to open up my idea file. I can do words on a slide, or I can do a visual with showing you this. So I've got a file here that just has some journal entries in it. It's not really that important how many journal entries or what the mix of those are. This is a demo file that I can use that's anonymized and has a lot of different interesting things in it. So I've actually imported this file into IDEA, and I want to do some analytics on that. So one of the things that I was looking for was on the slides was duplicate. So the way that we can look at the procedures here is in the Smart Analyzer. I can go to Select and Run. And here are the financial ones that were on the previous slide. So if I go to General Ledger, these are just some of the examples of some of the procedures that I could do. And if I check that I want to look for a duplicate entry, there is a little bit of a tagging process that you need to do, and this is basically kind of normalizing the data. So which is the ID field, and which is the amount field, and which is the date field. And I've already pre-done that for the purposes of this demo. So I'm going to look at duplicates. I'm going to look at journal entries by user, and I'll look at summary by account combinations along the way. So let me just show you what some of these look like. So if I'm looking for the duplicate ones and run that through, I've already done the analysis, so I just click on this one here, and now I can find that in the purchases journal, in period 4, there was a journal entry for this 163.50, but both user CK, both people have done this particular side of the transaction. If I go to the summary by person here, I'm going to go to this one. It's just called summarization. I don't have the names in here, but I just have the user IDs. And what this one is really showing me is by source, so cash disbursements, cash receipts, general journal. How many journal entries were done by user? And I look at this particular analysis because I'm trying to figure out, are there people who are doing journals that don't typically do journals, or are doing entries in sub-journals that they shouldn't be in? So I can look at the general journal here and find out that DA4 did 4 journal entries, and PH11 did 10 journal entries, and CK6 did 6 journal entries. But maybe I want to find out that, in another area, well, wait a minute. DA4, is that person actually supposed to be doing journal entries? Who is that DA4? Maybe that's the controller or the CFO. So if I want to drill down and find out what journal entries they did, because I've got this already done as an analysis here, I can just click on that, and I can pop up a listing of the journal entries that that person did. And then I can go ask them, what were they doing? So why did this person, DA4, do a couple of journal entries to move data from bank account to a clearing account? That may be a fine thing that they've done, but maybe I want to go investigate that. So I can just take a little snapshot of this, or just get this out to an Excel file or something like that, and do some analysis. That's kind of an interesting one. The other one I look at is accounts by, and let me just look at this one here. Accounts by, journals by account number. And what's interesting about this particular analysis that I did is it actually also spreads them by journal type. So not only do I have the account number here, and I could put descriptions as well, which would probably be useful, but if I have this account number, I can tell in here that some of these are cash disbursements, some of these are cash receipts, general journal, and along the way. So I can kind of see the mix of different journals in accounts. And what I'm looking for here is I'm looking for kind of a mismatch. I'm looking for a journal to an account that doesn't typically have that journal in it, and then I can drill down into that. So whatever this account is, why is there this particular transaction drilling into that? So that's another example that I could potentially look at as well. So a couple of visuals here just to show you that we can do some journals, we can use some tools here to help us sift through the masses. And if this was 1 million records, the analysis doesn't really take that much more time as well. So I'm not really worried about the size of the data as I'm moving forward. So again, just some examples of tests that you could do. And then I'll just kind of move on to show you, a little bit more. So again, the IDEA has some audit solutions in place. I showed you a little bit in the general ledger, but in the journal entries, but there's also a bunch of other areas that you can look at as well. Again, predefined tests that are common for auditors to use. So why create something from scratch when you've got something that you can leverage that the vendor has already provided to you? So at this point, I think we're ready for our third polling question. So Lindsay, I'll turn it back over to you.
Thank you, Mark. Our polling question is, how open are you to using pre-written analytics test suites to help you analyze key financial areas? Very open to using them, somewhat interested, I would like more information before deciding, or not interested in using pre-written tests. Again, this is our final poll. You must have responded to all 3 polls in order to receive CPE credit. So please go ahead and respond, and I'll give you another few seconds to take care of that. Okay, I'm going to give you about 5 more seconds to respond, and then we're going to close the poll. All right, I'm going to turn it back over to you, Mark.
Okay, so polling questions are done. So let's just move on to a couple of other areas here. So revenues. I've got some examples in here, and you might start sensing a trend here as I move through the rest of the examples here. I'm not going to do any more examples within the software, but just to kind of walk through these. So when I'm looking at revenues, here are some things that I'm doing. So I'm looking for gaps. Gaps help me with the completeness assertion, so I'm looking for gaps in the numerical sequence of invoices. And because most accounting packages do have an automatic numbering sequence, you actually shouldn't see any gaps. Why gaps would be in your data? Perhaps the company filtered them out because those are the ones they didn't want you to look at. I also do the flip side of that. I look for duplicates along the way. A couple other analytics that I like for revenues, and that is I like to look at the credits or returns by customer as a first kind of wave of this, and second by who did the transaction as well. So why are certain customers seeming to have a lot of credits and returns? It gives me a little bit of pause to think about, are they really getting a lot of credits and returns out there that are legitimate? Perhaps they are. Is there a particular issue with the kinds of things that they're buying? Maybe you've got a potential for a warranty or some sort of reserve because they've got bad things. Or is the salesperson and the customer working on a scheme where they're pushing a bunch of things, sales out right at the end of the period, and with the promise of, just send it back, or we'll credit you right back, right after the period is over, kind of a channel stuffing, kind of an exercise there. And then all by person, because I'm trying to figure out, is there a pattern of this person or these 1 or 2 people are the ones who seem to be initiating these things? Maybe there's something to look at there, because perhaps those people may be involved in some things that are not necessarily on the up and up. I'm a trusting person. I'm not saying that everybody who does the transactions are trying to do something wrong, but it helps get you a little bit of focus into what to look at, because otherwise revenues is the big area and you may get overwhelmed with all the data that's out there. So again, we did talk about some journal entries. I did want to point out that there are some other reference materials that may be useful for you. You perhaps can do a search on these and get these great examples of what to do for journal entries. Again, here's a little bit of analysis on some completeness for journal entries. You will get challenged on the completeness by your regulators and inspectors, so you need to pay attention to the completeness of the population. So where do we begin on journal entries? Should we start with everything? Actually, I don't start with everything. I try to just do a kind of a risk assessment and think about where the errors or frauds are most likely to occur. So these are some areas that I look at, complex, non-routine, and I may limit my journal entry testing to these ones. I may not do a lot of work in the normal day-to-day kinds of journal entries because, again, the risk potentially is in these areas here. What do you do about internal controls, potentially looking at segregation of duties, access rights? Just because somebody has the right to get into an area and do something doesn't mean that they actually did. You can do that analysis that I showed earlier, summarized by person, to see if somebody actually did something. So they may have a control weakness there, but it doesn't mean that they had a control failure because somebody didn't act on that particular control and change something when they had the opportunity to, but they actually didn't do anything with that. Just some other things about, who prepares it, and are they coming from the accounting department or some other department. So again, that's looking at the users and what they're doing in the journal entries, and again, different kinds of journal entries that you need to pay attention to as you move along here. Different kinds of journal entries, we already talked about those a little bit. A couple of other areas to kind of close off the parts here before we get into the Q&A in the last couple of minutes here. So the next one is really on cash disbursement. So there are a number of things that I look for in cash disbursements. I'll just kind of highlight a couple of these. Again, I look for the gaps in the sequencing. I'm looking for duplicates along the way. I'm looking for transactions at unusual times. So if the normal process of disbursements is they pay every Thursday, then why are there checks and other things that are happening on Tuesday, for example? Not that there's anything wrong with that, just it's out of the norm. May need to pay attention to that. I'm looking for payee information to the vendor and the employee to see if I get a match on name or address, because sometimes employees will set up a company but then use their home mailing address for the payment, so it gets diverted to them. So do a quick match on the employee data and the payee data with the name and address. Looking for different vendors with the same address, so kind of accumulate by address and look at the names that are associated with that. So why are we paying different vendors with the same address? Could be something there to investigate, perhaps something to look at. And look at disbursements where the approval is the same as the payment approval is the same as the purchase approval. Why isn't there a segregation of duties in that particular area? And in the payroll, this will kind of be the last one here before we go to the Q&A. In the payroll area, payroll is kind of one of those things where if somebody's getting paid too little, they will report that. So I'm not necessarily thinking there's an understatement risk on payroll, because if somebody doesn't get paid, they tell. But who's going to tell on themselves when they got paid too much? Probably not. So looking at payroll, look for payroll that there is an unusual number of items. So if the normal pay period is every other week, so biweekly, every person that's on there that's been there for the whole year should have 26 pay periods. So you shouldn't see anything that's more than 26. You may see some that are less than 26 because they're new people or they are terminated people, but you shouldn't see anything more than 26. Look for variations in the pay amount outside of the normal salary increase or bonus cycle. So look for unusual spikes in rates and in hours and rates. So, a person's working 40 hours a week and then all of a sudden they've got 60 or 80 hours. And it's not that they didn't work those hours, but if that's an unusual spike in their hours, you may want to go investigate that. And was there a different spike in the rate? So the normal rate is $12 an hour, and now it's $15 an hour, or now it's $25 an hour. So look for trends in hours and rates, and that'll kind of get you a little bit of focus in the payroll. And again, looking for the payee addresses and the employee addresses being consistent. So those are some things that you can do in the payroll area. And so at this point, I really wanted to leave the last little bit for some Q&A, but before I do that, I just want to thank you for participating today, and I'm happy to, at this point, turn it back over to Lindsay so that we can get through the questions.
Thanks, Mark. We appreciate you sharing your expertise with us. We are open for questions, so if you have any questions, please type them in the question box on the right side of your screen. We did record the webcast, and we will send the recording and the slides hopefully tomorrow. And for those of you that are qualified for CPE, we expect to have the CPE certificate sent out by next week. As your questions come in, I'm going to remind you that we have another webcast in this series. Our next is with Amy Manthe and Doug Oberman with Baker Tilly on September 6th. So check your email for information on that. They will be discussing tips for successfully implementing data analytics into your firm. So our first question that we have is, what impact do you expect blockchain to have on audit fraud in the short, medium, and long term?
Well, that's a question that's probably not on the radar of many people in the audience. So when I think about blockchain, in the short term, I don't think we're going to have much impact because there's not a lot of that happening. In the medium or long term, I think the profession has to pay attention to that. We'll probably need some guidance from the regulators and the standard setters as we move forward to this. It's probably going to be a rapidly increasing challenge, but also an opportunity for us to look at those companies that are introducing that. If you think about in years past, there was a piece of paper and that was the invoice and it got passed around, to now basically full automation through the entire process with digital, and you can't actually see an invoice or see the transaction. It's in a way that you can't really follow. So I don't really want to do a lot of detail on that, but it's probably something that we should start paying attention to, although I do think that the short-term impact is not really there for us yet.
Thank you, Mark. In your experience, how high a level of management is generally involved in the override of internal controls?
So at the supervisory level, so it could be at the, well, supervisory. So somebody is running a department or a part of a department. So the payroll supervisor, the purchasing supervisors, perhaps at that level. But the bigger frauds are and especially the reporting frauds, are probably going to involve people at the managerial level or the management kind of level. So perhaps at the controller level and maybe the CFO level, where the bigger reporting frauds are likely to happen. There could be some asset misappropriation at the earlier levels. So it's important for you to pay attention to the segregation of duties along the way. Look for those authorization thresholds and pay attention to transactions that are going in there. But you really have to kind of have the ability to override something or have some approval or some authority to be able to alter or change or introduce different transaction types.
Thanks. How would you test employee versus vendor files for employees using a friend's address or another address for AP check payments?
That's that'll be a little bit more challenging if they're using their friend. So now we've got a little bit of collusion here. I don't really have a good answer on that. I think I've never really thought about friends. I have thought about people with different last names living at the same address that perhaps are living together. Maybe they're roommates or else. But I haven't really thought about testing friends. Perhaps if you had names and you could look at the social media, so you could look at some friends lists on Facebook or some of the other social media to get a circle of influence, if you will. Perhaps you could do some work there. Good question, though.
Thank you. Our next question, and again, if you have questions, go ahead and send them in. It's our last question that we have right now. How do we respond to risk arising in the journal entries when we could not, let me repeat that. How do we respond to risk arising in the journal entries where we could not get all of the fields required for the analyst, or having trouble getting all of the fields really needed for the analysis?
Well, some of the fields that there are some fields that are so common that you should be able to get those. So I think in the general risk where you're looking for basically transaction date, transaction amount, some sort of a user ID, the journal source, a description. Those are really, really common fields, and you should probably be able to get those. If there are fields that you find that you can't get because the system doesn't have that, then you're going to probably have to think a little bit differently about how to address that. So if the field doesn't exist, perhaps the information that you're looking at could be in the description, because they may need to describe a little bit more about what it is because they don't have a field that helps them with that. So I think again, the most common fields are probably likely to already be available, and if they're not, you may just actually be limited in what you can do. I don't think that's a big limitation, but there are certain more advanced techniques that you probably won't be able to do without a little bit more creativity in how you search through the descriptions.
Thank you, Mark. That, I believe, is our last question. There will be, just a reminder, there will be a short survey at the end of the webinar. Please complete that as part of your CPE. We did include the slides in the handouts, so on the right side of your screen, there should be a drop-down where you can download a PDF of the slides that we just did, and again, they will be emailed tomorrow. Thank you again, Mark, for sharing with us. We really appreciated you. And if you have any additional questions, you can send them to marketing@automation.com, and we can pass those along to Mark, and he'll get back to you. Thank you, and y'all have a great afternoon.
Thank you.